All right, guys, welcome back to another video. My name is Daniel with Leon Investments, where we offer consulting to people who want to invest in the stock market. We have a free Discord community that you can join in order to get your feet wet with trading and access some free educational resources and explore some of our premium offerings, such as consulting. In this video, I want to go over why prop firms, the emerging prop firm industry, is a scam and why you should stay away from them. And I want to go over very logical reasons as to why they're scams, because a lot of people just see the surface and they say, oh, it's good. And then they go ahead and do it, right? And they fall for the scam. A prop firm, especially, I'm not saying all prop firms are scams because it really depends on their business model. Prop firms is basically just proprietary firms. But there are prop firms, quote unquote prop firms, that are arising with a specific business model. And this specific business model, which I'm about to say, is the following. They allow you to take a test for a fee. Could range from $500 to $1,000, depending on the amount of capital that you want to essentially manage. Higher amounts of capital require a higher fee, and you have to essentially, in all tiers, take a test. And this test has particular rules that you have to follow as a trader. You can't have 15% drawdown on a position or 10%. The tighter it is, the harder they make it to pass, because I'll get into the reasoning why. But you pass the test, right? You take the test, most will fail because of the rules. Let's say you're one of the few lucky ones that pass the test. You get access to managing capital, and then they'll give you like 80% of the profits while they take 10 or 20%. I think it's 90% of the profits go to the trader. And so this firm is taking on the risk of giving capital to someone that simply passed a test, and they're risking only getting a return on 10% of the profits. They're risking all that capital just to get a 10% return on profits while they give you 90%. I mean, it just doesn't make any sense to me, because a firm, especially a firm that manages money for clients, right? I'm not saying that's the same thing as a prop firm, but usually the portfolio management firm takes 20 to 30%, depending on the assets under management for that specific client, on a quarterly basis, while the client takes home 70 to 80% of the profits. It's in reverse. And so essentially the prop firm is acting like the client for the trader, and then they take 10%. So they're sacrificing 70% of the profits in this business model, because this business model works with that idea that you get 90% of the profits after passing a test that you're supposed to take in order to manage said amount of funds. It doesn't make sense. It's like they're saying, I'm going to take only 10% of the profits of the $500,000 that I'm giving you, when in reality, if the person is putting up the funds, they take the majority of the profits because they're taking on more risk, while the person that's managing the funds isn't really taking on risk because it's not their funds. But they are putting in efforts to manage the funds and time and resources. So they are entitled to, of course, a percentage of the profits that are generated. And so a trader that is successful would do this instead of going to a prop firm to collect 90% of the profits, because there's so much more abundance in managing portfolios for a broad or multiple clients than there is just managing funds for just one client, which is a prop firm. It doesn't make sense at all. And it's not a coincidence that these prop firms partner with these quote unquote traders online, where they post content of them closing a trade for $10,000 or $15,000 or $20,000 or $50,000, whatever the number is. And most of those trades that are taken in this content posted by these gurus, I think that's what they refer to them online as gurus, most of those trades are taken on an intraday time frame. And it doesn't really make sense, because yes, if you are going to film content, you're going to have to film on an intraday time frame, because that gives you time to start recording, enter your position, not have a lot of time elapse from the entry to the exit, and you have a piece of content that you can post online that'll do well, and that'll give you more visibility or more of an audience or more of attention for the support of that prop firm that you're supporting, that you're an affiliate of. Anyways, very rarely will you ever see a trader, one of those traders that we typically see online, close a trade live after have been in the trade for 2 weeks, 3 weeks, 5 weeks. Because at the end of that period where the profit is rolling in, you're not looking to turn on the camera, get the mic ready, get the recording software ready before you close a trade. You're looking to close that trade later. And then that's kind of when you say, here's a profit, here's the screenshot, here's the income statements, here's the brokerage statements. You know what I mean? You're not looking to record the content because it has already happened. You can't record it as it's happening, as you have a position generating profit. And if you do, sure, maybe you're moving your trailing stop limit order higher, but you're waiting more time, maybe another week for that trend to play out. And so you're not going to record from your first entry all the way to your exit, which is going to entail of a lot of time. It could be a month, it could be 2 months, it could be multiple weeks. It's not done by turning on the camera, entering a trade on a 5-minute time frame, profiting, and then stop recording and upload the content. It's not done like that. There are many successful hedge fund managers and investment managers that support time in the market versus timing the market, because it's very hard to time the market, especially on a risk management perspective, consistently over a long period of time. There are no hedge fund managers or investment managers that are successful that trade on the intraday timeframes. And so that's kind of where the line is drawn. And a lot of people view the stock market as a gambling mechanism, and others view it as for what it actually is. It really is perspective on how you look at things and how you want to approach it and what you want to do with that resource. And so, you rarely have successful managers trade on the intraday timeframes because it doesn't work over a long period of time. Warren Buffett said it best: if you like the stock at $200 and it goes to $100, you must love it at that price, right? So what does that mean? It's focused on risk management, intrinsic value of a stock relative to the fundamentals, of course, and noticing a discrepancy between the value and what the market is pricing for the stock, because there's a difference between the value and the price that you pay. Value is what you get, price is what you pay. That's another quote from Warren Buffett, I believe. That's essentially what these prop firms rules preventing you to do. They're not allowing you to take a 15% drawdown on a position, because then you broke the rules. And I haven't taken the test, but I'm sure maybe they close the position for you or whatever it is, right? And you fail. But in reality, there's this other investment manager, I forget his name, but he said he doesn't know a portfolio manager that doesn't have a position that is currently that is down in the portfolio. And so most cases are going to be down more than 15% on the position, 10%, because out of 100%, you're only going to be down 3%, 5% out of all of these trades that you have. No, you're probably going to be down 10%, 15%, 20, 30, 40% at a time. And so essentially these rules on prop firms are going to keep having you fail. And so the people that are usually the ideal client for these prop firms are people that want to gamble. It's like going to the slot machine and saying, oh, I have a potential payout of $1 million if I put in $2 for the slot machine, $10 for the slot machine, 15, 20. I'm ready to put $500 into the slot machine to get potentially win $1 million. It's essentially what these prop firms are about when they're, these emerging prop firms. They're tailored to that specific client, the client that wants to gamble in the market, or the naive person that comes in the industry and says, oh, this may be a way for me to do what I want to do. And they fall for the trap out of their ignorance. And so I remember I was in this X space, this Twitter space, and I was a speaker on there because I just requested to speak and they let me speak. And they were actually promoting that they were running a space in order to promote this prop firm or these prop firms. So my guess is that they received payment to page to start a space on Twitter. And then these prop firms come in and they seem to have a casual conversation about prop firms. And then they speak about their prop firm and then people join it. It's really not a business model that is trustworthy. There's no integrity in that business model at all, because it is profiting off of someone else's failure, which essentially is the last thing you want in a collaboration, especially in the stock market. Because if there's a collaboration between a client who has X amount of money that wants managed and a portfolio manager, you want a collaboration where both people win, where it's a win-win scenario, not where it's a win-lose scenario. And even if the trader manages to pass the test and get 500 grand to trade with, it's a win-lose scenario for the prop firm because they're only taking 10% of the profits. And so there are cases in which there are successful traders, but the firm reserves the right to pay them out or not. And on the surface, it looks great. It looks fantastic. Oh, I pay $500. Let me see if I can manage 500,000. I passed the test. Great. Maybe I haven't passed the test this time. I'll take it again. Another $500. I finally passed it. Most cases, people are not going to pass. They're going to run out of money before they pass the test, basically. And it's just something that I want to bring awareness into the community, because I see a lot of people falling for what looks good on the surface, because in most cases, everything isn't as it seems on the surface. You have to study. I mean, did you think that FTX exchange was gonna be one of the biggest scams on the planet? No, unless you looked at the fundamentals, unless you look at the income statement, the balance sheet of the company, unless you took a deeper dive into the operations of the business, because numbers don't lie. Numbers don't lie. You eventually see it. And so, yeah, it looks great on the surface, but you have to take a deeper dive. So this is just my way of making people aware of not falling for these prop firms. Oh, and by the way, I regarding the X space that I was part of, I started actually speaking what I'm talking about in this video in that space, and they kicked me. They muted me and they kicked me, and they tried to discredit me and act as if I were crazy or something. They could have said, oh no, we understand that perspective. I'm sure there are prop firms that are like that, but the prop firms here aren't like that, because what are the chances that none of the prop firms are scammy? It's a less probability than saying, oh yeah, maybe there are a couple of prop firms out there that are scammy, but these are not. Could have been a response. But if you're trying to hide something, you're going to say, no, that's bogus or that's nonsense. And you're just going to immediately dismiss it. And then you're going to kick the person and mute them. Be careful of who you trust, especially in these social media trading videos where you see, okay, setting my stop limit, sizing in, I'm in longs. And then they close the trade. $15,000. Now, I'm not saying that all of them, of course, I'm going to take my own suggestion. I'm not going to say that all of them are not, that all of them are scammy. Of course, there's some that may be successful. Who knows? But I don't know because I'm not in their shoes. For me to know, I have to live in their shoes, right? And know their true intentions behind what they do. But since I'm not living in their shoes, I can't really know, but I will assess I'll assess the probabilities of that being true, and it's leaning to the side of not being true. That's kind of what I wanted to talk about here, because I feel that needs to be communicated, especially in the space, so that less people fall for the tricks of these people that don't have the best intentions for others, especially these new emerging prop firms with the business model that I stated, and these traders that are quote unquote affiliates for these or supporting these prop firms. They're paid to essentially support that prop firm. That's why they mentioned the prop firm in the video. Doesn't make sense. Be careful and have a good rest of your day.